Stavros Tousios for M4Markets, back to euro dollar and also gold today. It's interesting that we are actually seeing prices somewhat overlapping now. And this reminds me two different things. One is that if we go as low as hitting that potentially, right? That low, we would be in some sort of flag pattern. And then of course we could continue to the downside, being that the downside being the predominant trend. Or also what else comes in mind is an actual rising wedge with a potential end already, which means this is the end of it with a throw over, or this is the first and this is the second peak. This is the first trough. We're going to get the second trough, then the third peak, and from there we're going to have that rising wedge, of course, and then we'll look for a short-term correction and then either continuation to the upside or that correction becomes a reversal. Okay, I'm leaning towards the second scenario, but for now, what is interesting to see is that we have some sort of divergence over here, okay, which suggests, of course, since we're above 61.8 and below 50, that there might be another leg due towards the 61.8, which would also bring a double bottom in focus. That could change if there is a hike. Okay, and we might see, of course, that being widely more affected, and we'll be looking to probably prices to go even towards 107 and below. A surprise, of course, with the FOMC or the Fed not really pushing the narrative towards more hikes, that would allow euro dollar to go higher from here. And then really the next level to the upside is around 108.45. Gold moved down instead, which might seem a little bit rare to you, but this really indicates that markets remain cautious about real rates and entrenched inflation and how the core inflation remains really high, elevated. The drop we saw on the CPI, by the way, guys, was just minimum in terms of the expectation, or compared to the expectations, it's just 0.1, which pretty much as expected. Now gold consolidates, and we'll have talked about this as potential triangle. It seems to me like we've come back to that low again, and there is two cases now, if of course this is a triangle. One is that we consolidate a little bit higher and then we break to the downside, or we consolidate, or we correct all the way up to the sort of the bottom side of this trend line, and from there we'll go lower. Now you might say both of these cases are to the downside. Yes, and I repeat, if this is indeed a triangle, because the predominant trend is to the downside. You have 1, 2, 3, 4, and 5. This is 5 ways for the triangle, and then further continues to the downside. Now, there is a case where we see breakout to the upside. That would be still part of the triangle. Would be in this way, ending down here, and we'll be looking for potential upside. But I don't see really how this is going to take us above the 1985 for the short term. Whereas on the downside, if we do see that 50 level breaking, because it's a triple bottom as well over here pretty much, then the door to the 1900s will open, and this is around the 61.8 Fibonacci as well. So as we are symmetrically consolidating, we need to pay attention also on the RSI. You see that so far prices are moving along with RSI. What's going on here? We have had this sort of actually no, we didn't get just this one, and we got a big drop. So over here as well, you see no indication. That means continuation of this potential range until we get that breakout, and we are closer to the bottom rather than to the top right now, which means there's more chances for a downward breakout rather than an upward.